right. Welcome back to another episode of How I Met Your Mortgage. As always, I'm your host, Adam Smith, with Just the Tips Coaching. And we've got a fantastic guest for you guys today, a repeat guest. So you know that says something because either they've been great on the podcast or they've bribed us in ridiculous ways. And it's not like we couldn't use the money. So welcome back to the show with an enormous bribe, Lindsay McCoy. Hi, Lindsay.
Hello. I thought you weren't going to tell anyone about the bribe.
No, we're absolutely transparent. Transparency number one. Yeah. So, although I took that payment in corn because, Iowa.
Yeah.
So it's been a minute since you've been on the show.
It has. It's been so long.
Yeah, I mean, not that we don't talk on the regular anyway, because if I have questions or concerns about anything and everything, ranging from interpersonal relationships to how to get a VA loan to go through, I'm pretty much telling myself or my team to pick up the phone and call Lindsay.
Yep. I'm on speed dial.
Yeah. Oh, absolutely. And we talk a bunch, but a lot has changed. Certainly for you, since the last time we had you on the show. We've relocated. We've done a handful of other things, but there was something that you had actually posted that we hadn't talked about really. I mean, not in specific terms, but there is a subject that I really want to focus on today with you. But let's give everybody a little bit of background. Lindsay and I share very similar roles. She is the owner of the CARE Finance Group in California. That's short for California Real Estate. I own the CORE Finance Group. That's short for Colorado, the Colorado Real Estate Finance Group. And Lindsay and I have had really synonymous activities and workloads and peripherals. Oh gosh, from the time we met, which would have been Vacaville, I don't know, a decade ago.
Gosh, maybe. Almost.
Yeah.
Wow.
I mean, it's been a minute.
Yeah.
No question. But yeah, so Lindsay and I have a lot in common. We do things in a very similar manner when it comes to lead gen, client retention, team structure, those kinds of things, because, well, we learn from each other and adapt and modify and pick up what great things the other person is doing and ditch the bad habits that the other person already had, and so on and so forth. Most of them anyway. We'll move past Lindsay's crack addiction. So can you
I was gonna say work bad habits at least.
Yeah, work bad habits, absolutely. We're gonna hang on to the personal bad habits, apparently. But the subject that has really kind of been rattling around in my brain that you had brought up, not directly to me, that I really wanted to discuss is you had made some comment or Facebook post or something to the effect that being in the mortgage space today was something like twice the work for half the money.
Yeah.
Right?
Yeah.
And there was a lot of...
I was so abruptly corrected by my other mortgage peers to say, you're getting half the money?
You're still getting half? That's great.
Yeah.
Okay, so exaggerations aside, I do think that it's a really big deal. And I think as far as our audience is concerned, when it comes to other mortgage loan originators, which is a very big deal, and real estate agents who really should kind of have a bit of a grip on what's going on in the mortgage originator space because the optics aren't good, then I think that clarity will help a lot. And hi, Jen. Yes, good morning. Hope you're feeling well. Lindsay, you know that Jen's pregnant?
Yes, I do.
Okay. So I'll bet we feel better this morning than Jen does, despite only getting paid half.
Yes.
Yeah. So I do think that this is really valuable information. And I really want to get to, I don't want to say it's a problem, but the root of the problem, for lack of a better term. And I think there are a few things that I'm obviously aware of. Well, we haven't seen much change in the way of guidelines. We haven't really loosened that up. Obviously, there's been a little of more flexibility in the non-QM space when we're doing that. But in, conventional lending and conforming lending, Fannie, Freddie, FHA, VA, USDA, despite the fact that there's more inventory, despite the fact that it's become more of a buyer's market, it really isn't any easier as a buyer to get financing for that, which is part of it. I think it's part of it. And I think the other piece of the puzzle, and correct me if I'm wrong or if you have a different opinion about it, is that we've got a bit of a bottleneck. When we had a peak during the pandemic, and everybody in the loan origination space, in the real estate space, knows that when shit's easy, people jump in, make some money. When they actually have to fucking work for it, they bail. And I don't know how many people we know in that, but at the peak of the pandemic, we had reached a point where there were only almost a million federally licensed mortgage originators, 900,000 and change. And the number that renewed their license for 2025 was less than 100,000.
Yep.
Now I get it. And are we really comparing that to what goes on in real estate, where we know 80% of the agents fail in the first 2 years, 85% in the first 5 years? There's some synonymity there. Although obviously the bar to get a mortgage license, state and federal, and certainly in California, is pretty high. I've got a client whose son wanted to get into the loan origination space. I helped him with a few bits and pieces, but he failed the exam 3 times. Got to wait and take it again when you do that. So it's not easy to do. In fact, looking back on it, although it's been so long, I'm not sure how I did it. Right?
Yeah, right.
I've told a lot of these people, hey, what's in the exam, this is true in real estate as well, isn't what you're really going to practice. That's not the job. Yes, you need to know the federal law. You need to know your state law. But you're going to be bound by lending guidelines that are going to protect and prevent a lot of that. And that it's actually a sales job. Your job is to generate leads, find buyers and sellers, find borrowers, all other walks, insurance, financial planning, whatever. Your job is to generate leads. And everything that's a byproduct of that, you can pretty much pay somebody else to do. And I know you and I do exactly that. But not only is it difficult because the job you're learning to be examined for, and the examination process to boot, isn't really the job. So I try to impart, hey, just bring good test taking skills. That's going to be equally important to actually knowing the content, which isn't going to quite match up with what you learned in the exam. Mm-hmm. So now we've got a bit of a bottleneck. We've got more inventory. We've got more borrowers. We've got a whole lot less in the way of mortgage originators. So yeah, smaller pie, but bigger pieces. I mean, if we lost 90% over the course of a few years, that's a big deal. But what else are you seeing that is making it so we're literally working twice as hard for half the money? What is going on so that other originators can get their head around it, and the real estate environment, the real estate agents can understand what we're dealing with, what things have been piled on, and why it doesn't really have to do with them or their clients. It's just a shit show. It's a pretty shit show, but the turds are polished, but they are still turds.
It's a lot to unpack.
Yeah,
that's a lot. Where to start there? So going back to what I posted, was really directed at the level of respect that loan officers get in the real estate space. And part of that is borrowers not fully understanding, and a lot of media junk, and just the media's gone crazy at this point. Yes. And there's, gosh, I'm going to say the quiet part out loud. The level of entitlement
it's big.
And the recent memories of 2020 interest rates really has come through in borrower sense. We have people wanting to borrow a lot of money for no money and then getting mad about the process. So it feels like we're working 20 times harder. Then you have lenders who are strengthening their risk management. So conventional guidelines haven't changed because Fannie Freddie is stuck in conservatorship for who knows how much longer. They have no ability to hire at a competitive level and bring in more technology. and more seasoned people to advance conventional and advanced guidelines into a new era. I should be able to take bank statement screenshots from a phone. Like they're legitimate. It's okay, but we still can't. So you have that trickle down effect leading into micro lenders trying to strengthen their risk management because somehow now in this day and age, fraud is at a higher level.
Crazy, isn't it?
It's nuts. And I think, and then obviously the cost of lending, the cost of homes has decreased applications to lower levels in 2008, which is wild. We have less originators, but we have less loans.
Oh yeah.
A lot less.
Oh yeah.
People are, you've got a lot of parents liquidating funds. I see this especially in California. I have a lot of parents who would rather liquidate funds and pay cash for their kid's house and let their kids pay them.
That's interesting.
Yeah,
okay.
I
haven't seen a lot of that. I mean, obviously I'm seeing a lot of things like that and other creative, for lack of a better term, ways that people are managing down payments, getting out of MI, those kinds of things. But yeah, to liquidate assets where your money is earning money and to purchase real estate for cash. And you and I obviously have a very strong feeling about the fact that home equity doesn't have a return. The real estate market does not give a shit what you owe on your house. It's going to go up in value the exact same way. Yeah. So that debt leveraging piece, and I understand that we're talking about people in our age group or even millennials, Gen Z, and their parents might be Gen X, still possibly boomers, are going to maintain a different mindset about debt leveraging. We could still be talking about a lot of people that buy a house, get a mortgage, make their 360 payments, and then invite their friends over to have a deed burning party or a note burning party, excuse me. So that some of that does still exist, I have no doubt. But wow, it just makes the hair on the back of my neck stand up to think that in California prices, that we might just let $1 million sit and not earn.
Yep.
Wow. Okay.
Yeah.
So
I
want more. I want more.
Right. There's a minority of people, but I have watched it happen.
Okay.
I have lost
What
deals.
kind of a return am I getting from my kids? Am I charging them interest?
Yeah. They're charging them interest. They're like, I'll charge them 6%. I don't care. They're going to inherit all this money anyway.
All right.
It's happened to me twice.
May as well spend it now. Okay.
Twice in the last 12 months.
Wow.
8 months.
All right.
So,
Stephen Brand. Hey, buddy. Yeah, it's good to see you. I love his Facebook picture. I really do.
I know. It's really great.
Yeah. So that's an interesting one. That's really a unique issue. Okay. So, but I'm not sure that really lends to why it feels like we're working twice as hard for half the money, or we may actually be working twice as hard for half the money.
There
may be some truth to that.
There's a mindset thing too. We have less deals, so obviously there's less money there, right?
Sure.
It's more stressful on borrowers. So I'm definitely getting the brunt of that. I know other loan officers are feeling that too. So it's more stressful on borrowers because they're begrudgingly saying, fine, I'll get a 6.5, 6.875 rate or whatever that rate is in the 6s, the 7s, in that range. They're already mad about it. And then I'm like, hey, I need your bank statement. I need your transaction history. Hey, that transaction history you sent me from your phone, I actually can't use it. I need you to go to a physical computer and I need you to print it out. And I need you to mark headers and footers. Like those little things, like it just eats at the already annoyed borrower's pain tolerance for this process. So the fact that we haven't used technology to advance our process in the era of AI is frustrating.
But that's historic issues in lending. We're the last industry to still use legal size paper. Not even the lawyers were using legal size paper. Right?
I remember that.
Okay. And we were having a conversation.
In fact.
Yeah, absolutely. We were having a conversation about, 1003, 1008, GFE.
All legal size paper.
Till
printed and T-boxed to an underwriter somewhere. T-box is like FedEx for old people.
That's right. We actually talked within the last couple of weeks in my office about how, and this is going to make us seem really old, we used to have the fax machine tied up all day because the first half of the day, all the fucking rate sheets were coming in.
Yeah.
And the second half of the day, you had to fax out all the conditions.
Mm-hmm. That was the beginning of my career. So luckily I didn't have to deal with that.
You dodged a lot of those bullets.
Yes.
All
yes.
Right. So
I did.
What should the real estate agents understand about why this process seems like more of a clusterfuck than really it ever has? Yes, there are fewer of us that can do what you and I do. Okay, obviously. Yes, we are certainly dealing in an environment where secondary and tertiary investors are doing everything they can think of to cover their ass. They are not buying back any loans. Forget it. They don't have the capital to do it.
No, they don't.
And we are technologically behind.
Yep.
Again, refer to the previous comment about how we were using legal paper and fax machines as the last industry to ever do so.
Yes.
Okay. So we put that shit aside. What do the real estate agents need to know about why this seems so... Stephen, it's an ERLA now, folks. Yes, Stephen, thank you. It's the Uniform Residential Loan Application.
Yes,
we appreciate the feedback there. But really, what else should we be educating on? And we focus on educating borrowers.
Yeah.
Our agents focus on educating buyers and sellers. All of us, we know we are fighting against the current when it comes to the media, which is a total shit show, and you can't even tell what's real there anymore. And it's evil stepsister social media, which is even worse. So we're all kind of swimming in that same, creek going against the current. But from industry to industry, what should the real estate agents know about what the mortgage originators are dealing with and why it looks like the loans aren't moving the way they did in 2020?
I actually think you said it. Lenders are mitigating risk and they're strengthening their files because they can't afford a buyback. So they're not going to be as lax on, we don't need that transaction history. This is fine. They want it. They want every single piece of documentation because nobody is buying back a $500,000, $700,000, $1 million loan. They're not even, they don't even want to buy back a $200,000 loan.
Right.
Because margin compression.
Because there's no money.
And because there's no money. And know that, yes, I respect the fact that you have 2 or 3 clients in your pipeline, real estate agent. I probably have 10 because that's just the catalyst of our industries. And so I'm dealing with that from every single point. And when you call me, again, I'm going to say the quiet part out loud. Maybe it's just my old age and it is what it is.
Just tired and cranky.
When you call me and ask me for 7 different scenarios on a client that is going to a new home build and is going to use a new home build lender, you're part of my bottleneck.
Yeah.
Because I spent hours doing that for you, an hour's worth of time getting your client pre-approved. And you knew that we were going to a new build and they're going to use that lender because nobody's going to pass up $25,000 of seller incentives.
I've seen more than that. Although it's funny because we're getting a lot of them back. The lender's builder, which I hate that fucking term. It should be your lender, not the builder's lender.
I know.
And make no mistake, the builder's lender works for the builder, not for the borrower. But I'm seeing a lot of them come back because the builder's lenders are incompetent. They can't figure out how to structure these loans and get them done. And when that happens, yay, not only are we seeing the loans, but the buyer-borrower is getting to keep all the incentives.
We're not seeing that as much here.
Right.
Even if they screw it up, we're not really getting the incentives. But I will tell you, they are a huge disservice to veterans.
Oh, no.
I do Lots of VA loans that builder lenders can't figure out. The worst of
I'd like to think I'm pretty good at it.
I'm not going to name them because I don't want a cease and desist letter.
No, don't do that.
But there is one home builder in particular, nationwide lender. Nationwide, lender,
builder and
home
lender,
builder.
right.
They're everywhere. I have done more VA loans for them or through them because of them, because of just sheer incompetence.
Because they've dropped.
We're talking about 100% disabled veteran who they said, well, we're going to charge you the funding fee and you can just go get it refunded later.
That's not how that works.
Multiple times this has happened.
That's not how that works.
No, it's not.
Okay. I'd like to think I'm pretty good when it comes to that particular niche in the lending space. Obviously, we deal with a lot of veterans. Colorado's a fairly high per capita population. Colorado Springs being the hub of that. We have a ton of military personnel, current, past, and I still get hung up and call you. Right?
Yeah.
So if I'm on the spectrum somewhere where I'm figuring most of it out and still seek out help from Lindsay, how could I possibly expect a builder's lender who, how the hell you maintain a license is beyond me. You've got an NMLS number that reads like an international phone number for one, right? By the way, for those of you that don't know that, national mortgage licenses are issued chronologically. So if you see someone that has a NMLS number in the 3 million range, they're probably pretty new to this.
They are brand new.
They're brand new to this. Okay. Now I got to know, what is your NMLS number? Your personal one.
One something?
Really?
Yeah. Gosh, I don't know it by heart. Is that sad?
208-798.
What is yours?
208-798.
208-798. Wow. Yeah. I actually think I'm probably in the million range.
Whoa.
Yeah.
Lindsay the newbie.
Yeah.
There's only like 2 million people that did get a mortgage license after you did.
Only 2 million people.
Now here's an interesting one. Check this comment out from Steven.
Okay.
The average LO in the country only closes 0 to 3 VA loans a year. I guess that doesn't really surprise me. I do come across a lot of LOs that won't touch them because they will admit they don't know what they're doing. I appreciate that. Absolutely. I respect that. Yeah, please do not fuck up a veteran's loan. Yeah, I respect that. And I have huge respect for real estate agents who will seek the education, who are like, hey, I've never helped a veteran, but I'm going to find a veteran-focused loan officer who can help guide us through this and who are just completely open and honest. It's in this industry, what makes it even worse is the people who lie or hide. And they think that these egos or like, oh, yeah, I can help you. It doesn't matter. Like, I got this. And you don't, because there's intricacies to veteran loans and other loans too that you just need to have experience with. And you need to be humble enough to ask for help. I will help you. Well, you need to be able to say, I don't know. Yeah. But I'm going to learn it. Yeah. I'm going to find out. I still say it all the time. And I had that same hiccup for years learning reverse mortgages. And those are tricky. I just wouldn't do them because I didn't know what the hell I was doing. Had Dave Ryder teach me for literally a couple of years all the differences and intricacies. And then finally felt comfortable enough to start doing them. And even then, still a bit of a crash course. Yeah. Right? Because again, so many of these situations are so different. Mm-hmm. First client I helped with a reverse, I said, you're my first client I'm ever helping with this. I have people that I have mentors who can help me, but I want you to know if you want to stay with me and work with me, you're the first person I'm helping. I'm completely willing. I'm capable, obviously, in other areas, but so I believe in that transparency too, because there are a lot of things. There's a lot of synonymity. An appraisal is an appraisal. It has to be a VA appraiser, but there's an appraisal. Debt to income ratios are debt to income ratios. It's what it is. But do we know what our concession caps are? Do we know how much of it can go towards a rate buy down? Do we know that seller concessions can pay off debt? The veterans' debt, you can't do that in another program.
No.
These kinds of things. So, yeah, there are a lot of intricacies.
You can buy them a washer and dryer.
Yeah, that's true. That actually is true. And a lot of people don't know that there are so many different little bits and pieces that go into each of these different types.
Yeah.
I mean, we could have the same conversation about USDA.
Yeah,
Obviously,
absolutely.
we can have it about HECM.
Mm-hmm.
We can probably, and I know that you actually kind of started pushing everybody down the road for this, your office and mine. We wrote a ton of second position loans in 23, 24, and probably still do.
Still do.
We're still writing a lot of HELOCs and HELoans. Hey, you got a lot of 20% credit card debt, but your mortgage is 2.5, golden handcuffs. Yeah. I feel you. Mine is too. In fact, I'm living in this house that's way bigger than I need because I couldn't get half the house for the same money.
Right.
Okay. So a lot of second position stuff. And again, a whole other set of intricacies, another sect of required education for the loan originator. And there's so many different things going on right now, even just in acquisitions. So for those of you that are real estate agents, VA, FHA, Fannie Mae, Freddie Mac, most don't even know the differences between Fannie and Freddie. And there are a lot of intricacies between those two. Let's not even go down the non-QM space road, which is another enormous segment of what's going on with bank statement loans and debt service ratio loans and ITIN loans on them. There is so much necessary knowledge and education that the loan originators need to have today that it's probably fairly obvious why, we're under 100,000 that renewed their federal license this year. And I think more importantly, why it is twice as much work.
Yep, absolutely. And yeah, it absolutely is. It absolutely is. And I think like the message to real estate agents is like, let your loan officer be honest with you. That's it. I work with a ton of agents. I love educating. I have a lot of agents that send me 1Z, 2Z deals, and that's completely fine because we've had these conversations and built these relationships of like, hey, I'm going to tell you what's really up. I'm not ever going to lie to you. I'm not going to sugarcoat it. And if a listing agent calls me, I'm going to tell them the truth too.
Well, you and I run boutique operations.
Yeah.
This isn't Rocket. This isn't Nexa. We don't have time for that.
No.
I cannot work on transactions that aren't going to close. I cannot pay my team by the hour for working on transactions that aren't going to close.
No.
There just isn't any bandwidth for that.
No. And it doesn't do anyone any service.
No.
Because if I tell the client, oh yeah, no problem, it's going to be easy, and it's going to be a nightmare, and I already know it, then I'm going to tell everybody.
This is a nightmare.
Yeah, this is going to be hard. This is going to be emotionally taxing on everyone. And I need everyone to stay in it or we're not getting to the finish line.
That's funny. I had an agent refer a transaction over the weekend, and it's going to be hard. It's going to require some work. And I was actually asked, is this transaction going to make my stomach hurt? And I said, yes, absolutely. It is. You can bet on it. There's a flip side to that, though, Lindsay, and I want to emphasize that as well. We all know it. In the real estate space, you guys have got to understand what's going on our side. We joke, although it's not a joke, that there are 3 people you have to tell everything to if you want to buy a house, borrow the money to do it. Your lawyer, your shrink, and your mortgage lender. You have to tell those 3 people everything. Otherwise, you're not going to have positive results. Okay, your lawyer, your shrink, and your mortgage originator. They need to know everything. And I know I roped you in on this one particular transaction where there were some credit issues that spawned additional credit issues. And the borrower thought it would just go into the radar. And it didn't. And when he told us that he was being transferred for work when he wasn't, we thought that would just slip under the radar, I guess. And of course, it's not. And there were a handful of other things, and it just got to where I'm pulling my hair out saying, dude, you've got to tell me everything. thing. You've got to be transparent on this stuff, because if there's a problem and I know about it, I've got a much better chance of fixing it than when the underwriter finds out about the problem, the closer finds out about the problem, quality control finds out about the problem, whatever it is. So please, for the love of God, and I know we don't have a lot of consumers that participate in our show, the video or the podcast, video cast or the podcast, but the real estate agents, please make sure you continue to emphasize with your buyers that their mortgage lender needs to know every fucking thing. We're the ones who can solve the problem before it becomes a problem.
Yeah.
Because once it gets past us, once it gets past all the eyes in my office and Lindsay's office, it's too late.
If it has anything to do with money, I need to know about it.
Oh, God.
And I run a mortgage company. I don't run a church. Like, you can tell me the details. It's fine.
Yeah, that's true.
I don't care about your OnlyFans subscription.
And
like,
I
don't care.
And I'm not going to make you say any Hail Marys.
Right?
Right.
I'm not going to condemn you to tell me.
I'm not even sure that's a sin anymore. We have a new pope. That guy seems really cool. He's a White Sox fan. I'll ask him, but yeah, I'm not even sure that you have to confess that to your priest, let alone to your mortgage originator. So yeah. Oh.
And real estate agents, like, I love when you hear something or go take the buyers to a showing and they're like, oh my gosh, and they're talking about stuff, and then they're like, yeah, we just ordered the new furniture, and you call me and go, they just ordered furniture. and then I call them. They just
pulled up in a car with temporary tags.
Yeah. You see those things, you observe those things, it is okay to snitch on them.
Okay.
Because I would rather kill the deal now than in 2 weeks when you're like, oh yeah, when we were at the inspection 2 weeks ago, I heard them talking about that. Okay.
Yeah.
You told me 2 weeks ago we could have resolved it without the seller canceling the deal.
All right. So is that the lesson we're leaving everybody with today? Agents, snitch on your buyers.
Yep.
Okay.
Snitch on your buyers, and let me be honest with you about what a nightmare this is going to be or how great this is going to be.
Yeah.
That's it.
Fantastic. Cool stuff, Lindsay. Thank you. This is always so much fun having you on the show. And of course, we did already burn through our time because it's you and I talking.
Completely unscripted with no plan.
No plan.
That's how we do this.
Actually, it's funny. We're going to take next week off after the 4th of July. And the week after that, we're going to have Stephanie Ham on the show.
Oh, fun.
Okay, so speaking of small world kind of stuff, Stephanie's never been on the show.
What?
I know. So she's asking me, what do I need to prepare? And I was like, nothing. So, well, what are we going to talk about? And I said, you. She said, well, that's an easy subject. And I was like, good. I'm glad you think so. But
you talk about Vacaville because she's like right there.
Oh, yeah. We did talk about Vacaville today.
Mm-hmm.
All right. Well, we'll do that again on the next episode. But thank you for doing this again. I know it's not all that easy to carve out this kind of time on a Monday morning. Now you're in the Central Time Zone. You had to brush your hair. Did you bathe?
Yeah, I did.
Okay.
I took a shower and everything.
A shower and everything once a month, whether you need it or not.
Yeah.
Well, it's the end of the month, so you probably needed it. All right. And for the rest of you watching or listening live or in syndication, you can catch us live on Mondays at 9:30 Pacific, 12:30 Eastern on Facebook, LinkedIn, and YouTube. A mere 48 hours later, the podcast is on Apple, Amazon, and Spotify. And for all the other things that we do here at Just the Tips, the weekly little tip video blog, the books I write sometimes on these weird subjects. We're still going to do the Mile High Mastermind again in the fall. Oh, you see it. Lindsay's eyes got a little wider there. She loves coming to Denver for that.
Yes, you do.
Okay. Well, all these things and more can be found at justthetipscoaching.com. Other than that, Lindsay, anything you want to leave our audience with?
No, I think we said it all.
Well, we've said a lot, no question. I don't think we've said it all. That would probably take us 100 hours of this podcast. So we'll do it again. I'll put in the notes right now that we'll get Lindsay back for another episode. I have no idea how many times you've been on the show.
Me either.
Okay, it's a few. It's more than a few at this point. This is our 8th season. So we'll get Lindsay booked for an episode next year on our 9th season. I know. Now you're feeling old.
Wow,
right.
So old.
I've known you longer.
You sound old.
I am old. I am fully ready to admit. But I don't think I've been doing the podcast longer than I've known you.
No.
And we're going to roll into our 9th season here. So, yeah, it's been a minute. All right. So we'll cut it at that. Thank you all for listening. Thank you for watching. Thank you for participating. Steven, thank you for chiming in on a handful of occasions. Jen, you as well. And that's it for this time around. Lindsay, don't go anywhere. I'm going to run our extra and need just a few more minutes of your time. And we'll go from there. You guys all have a great week. And happy 4th of July.